Congratulations, you've made it through another tax season. That said, many of you may not be celebrating if you received an unexpectedly large tax bill this year. Today, I'm going to be addressing reasons behind large tax liabilities as well as large refunds. While it's nice to receive a refund, not so nice to get an unexpected bill on April 15th, it's usually best to try to break even during tax time. Your goal should be to owe nothing and to pay nothing come April 15th each year. So let me explain tax refunds and liabilities in a little bit more detail. What does getting a tax refund mean? While it may be exciting and you may be happy to receive any dollar amount come tax time, essentially what you're doing throughout the year is loaning Uncle Sam your money until you receive it back at tax time. So rather than loan your money to him throughout the year, it may be best to adjust your tax withholdings on your pay stub or make some other adjustments so that you're not getting this large sum back at tax time, essentially loaning your money out throughout the year that could be used for other things towards savings goals, paying down debt, building your emergency fund, things of that nature. If some people like to receive this tax refund, they said, well, it just kind of forces me to save, so I'm just going to keep things as they are. I like getting this dollar amount back at tax time, and I'm just going to leave things as they are. And many of you, that's okay. It's okay to do that. What I would argue is that it may be better to instead, throughout the year, have the funds withheld from your pay stub and have it go directly to a savings account that's targeted to pay down debt, or to a separate savings account that's targeted for that emergency fund, or even to an IRA or an investment account that could grow throughout the year rather than having it, again, loaned to the IRS and then you receiving that refund back on the 15th. On the other hand, those of us that had to pay a large tax liability this year and have in the past, what that means is obviously we're not withholding enough on our pay stubs, or we've had some other life event or change throughout the past year that has caused this unexpected tax liability. So for those of us on a tight budget, these unexpected bills, unexpected liabilities can really cause a ripple effect to our financial life and to our financial house, because maybe we have to take a distribution from our 401k or from our IRA in order to pay the taxes. Maybe we need to build up credit card debt in order to because we've got to pull from our savings to pay the tax liability. And that can just become a long-term bad effect on your financial situation. So it's best to plan ahead, try to have a good idea of what your tax bill is going to be, and I'll explain and give some guidance on how you can better prepare as we move forward here. But let me help to explain some possible reasons for large tax refunds or large tax liabilities. Some of these things include if you change jobs and you're making more, you're making less, and maybe when you filled out your paperwork, when you change jobs, the tax withholdings, you inadvertently put a different amount or put a different exemption amount than you had at your previous job. So it caused excess to be withheld or not enough to be withheld for the remainder of the year after you made that job change. Maybe you started a new business and all of that is new to you, and whether you work with a CPA or not, sometimes you're just not prepared for that additional tax liability. Maybe you cashed out an IRA or a 401k and didn't have enough taxes withheld from that distribution, so that bumped up your overall tax liability. Maybe you had large gains or interest or dividends that paid out from a taxable investment account that you didn't necessarily account for. In addition, maybe you, with the job change or with a job change that wasn't a chosen job change, you received a severance package and that filtered into your taxes and your liability there. Maybe you sold a property or you lost a spouse or divorced. And so now you're filing a single tax return for the first time, and those tax rates are different than the married filing jointly rates. So something that helps those taxes are the kids. If you had a child over the past year, while that doesn't help our day-to-day budget, children obviously add to our expenses. They also add to our heart, so it's all worth it. But they do bring us additional tax breaks, so we can have credits or deductions that coincide with having children. So there's a lot of different life events that I think we forget throughout the year can have a drastic effect on our taxes, either good or bad. So what can we do about this? How can we plan better for the future? So as with everything that I talk about, I encourage you to come up with a plan, to be better prepared, and to be better organized. So how do we get better organized for tax season? What I have done is to try to help me, and don't get me wrong, I'm still at tax season rushing, trying to gather, documents and remaining information. But throughout the year, I have tried to create a filing system. So for me, it's an electronic filing system. You can create a paper filing system. But for me, in my email, when I make an online donation to, one of my favorite charities, I'll generally get a receipt via my email, and then I'll move that receipt into my 2021 or 22 now tax folder. And so I'll try to save everything in that folder, even if you're not positive it's related to your taxes or that you're going to be eligible for a deduction for that charitable contribution. Go ahead and move it into that tax folder, and then you've got everything saved up there together. If you have children and you work full-time and you need to pay for daycare, or you're paying for summer camps to entertain your children while you work throughout the summer or during their spring breaks, you may be able to deduct those expenses. So when you pay for those, again, oftentimes for me, for my children's camps and things of that nature, I'll pay online, I'll get a receipt in my email, and then I'll move that receipt over under my tax folder that I've created. So trying to stay organized throughout the year will help reduce the chaos and unpreparedness that you feel come tax time. The other things that I'll file in either my electronic or paper filing system are my personal property tax receipts, as well as my real estate property tax receipts when I receive those. So we all generally pay those sometime between usually November and December at the end of the year, and then we'll get those receipts come January. So you'll want to file those away in your filing system as well. The other thing that we'll get, if you're making ongoing contributions to your traditional or Roth IRAs, you won't generally receive the form that confirms those contributions until about a month after the end of tax filing season. So in other words, we all have until April 15th each year, or until the tax deadline this year, that was April 18th each year, to contribute to our IRAs for the prior year. So we had until April 18th this year to make a contribution to our IRAs for 2021. Since we have until that time to do so, we won't get the form stating that we made the contribution for the prior year until about the May 15th timeline each year. So once you get that form, it's called the Form 5498. You'll receive that generally sometime in May from the custodian that holds your IRA account. Once you receive that, again, file that in your electronic or personal paper filing system to reference for the following year. Another thing I like to file is if I do home improvements. I don't know for sure that things are going to be deductible, but generally if we make, especially an energy efficient home improvement, I'll file that in my tax folder and review it with my tax advisor or my tax preparer at tax time to see if we are eligible for that deduction. So anything that you think might be related to taxes or might create a credit or a deduction for you, file it in your electronic or paper filing folder throughout the year. Finally, let me give you some resources to also help you better prepare as we push forward. I would highly encourage you to meet with sometime after tax season. So give your tax preparer or CPA a little bit of a break. So maybe a month or two after tax season, reach out to them and say, hey, can we get together and talk about what caused what on my taxes, what in my life over the past year caused this huge tax liability that I was greatly unprepared for, and what can I do to prevent it moving forward? And sometimes that conversation might be, what was a one-time event? You got the severance package. It was only something that happened last year. Moving forward, I anticipate your tax liability to be more in line with what it has been in the past. Other times, those life events are something that's more permanent as you move forward, and your tax preparer can help you figure out if you need to adjust your withholdings on your pay stubs. Or for those of us that pay estimated taxes, they'll make some adjustments in how and how much you pay on those estimated taxes. So there are some things that they can help you do, even if you meet with them a month or two after tax season, to better prepare for the current year when you go to file next year. If you're a do-it-yourselfer, so you do your own taxes via TurboTax or other online tax filing system, there are some resources that we provide on our website. If you go to arkfinancialwellness.com, go to the on the far right, there's a helpful tools, and scroll down to the wellness tools, and you'll find some financial calculators there that can help in all aspects of your finances, but you'll find some that are particularly related to tax planning. So go to the tax planning calculators and you'll find a tax estimator, and that will help you kind of guide you to plug in some information on what your income sources are this year, potential tax deductions or credits that you may be eligible for, and try to give you an estimation of what your tax liability might be for the current year. Finally, I'm going to encourage you, of course, to meet with your certified financial planner to walk through your financial plan and determine how they can work with your tax planner or with you, if you're a do-it-yourselfer, on trying to help you better prepare as you move forward. So a CFP is qualified to provide tax guidance. We do not give tax advice, and I do not prepare taxes as a certified financial planner, but I am part of the CFP course is learning about taxes, the ins and outs of a tax return and how it works, so that I can, when I meet with a client and we work through their financial plan, we can generally talk about taxes, and I can provide some general guidance that then they can take to their tax preparer and say, okay, this is what my CFP has suggested that I consider. You best know my tax situation as my preparer, as my CPA. What do you think about this? And should I move forward with this? Better yet, if you work with a certified financial planner like we are here at ARK, what we'll do here at ARK is work in concert with other professionals that you work with. That can be your tax planner, your insurance person, your estate plan attorney, to ensure that your goals are lined up with how they're positioning you with what they can do on their end. So we'll often reach out directly with our clients' CPAs or tax preparers and say, this is what, based on what we know about our clients' finances and what they've shared with us, this is a recommendation that I'm considering for them, so that not only they can reduce their tax liability today, but I'm looking out into the future and hope to reduce future tax liability. And I'll walk through the scenarios with the CPA or their tax person, and we'll figure out together what's the best step moving forward for our client. So I encourage you to work with a CFP, not only a CFP that can provide tax guidance, but also with a CFP that is willing to work with your tax preparer for your best interest. So I hope you found this helpful in explaining how tax refunds and liabilities work. If you'd like to schedule a time to meet with me to kind of delve a little bit more into your personal tax situation and for me to provide you some general guidance, I'd be happy to do that, no cost or obligation. You can call or email us or head to our website, again, at arkfinancialwellness.com, and use our online scheduling tool there. So thanks so much for tuning in today. Remember that achieving overall financial wellness is a journey. It's not a destination. Thank you for listening, and happy spring and happy planning.